Good day. It is Sunday, September 30, 2018. We generally don't make these videos on Sunday, but today we have a message that we think is very, very important to serious traders. We want to talk about the four characteristics that define the final top in a bull market cycle, the point from which the bear market gets underway in earnest, in a very serious way. These four things happen at that final top and define it. Number one, we have a record high in the Standard & Poor's 500. But that is accompanied by, number two, a failure by the advanced decline line on the New York Stock Exchange to make a new high. The ADL fails. Thirdly, new lows are very substantially above where they had been in prior months. Even though the Standard & Poor's 500 is at a new high, new lows are above where they had been. And finally, the McClellan Summation Index is materially below its previous levels over prior months, even though now the Standard & Poor's is at higher levels. The McClellan Summation Index fails. Let's give you some examples of that. First, in 1987, in August, we had the final high in the Standard & Poor's 500. As we did, we saw the advanced decline line on the New York Stock Exchange fell substantially short of where it had been in March. The number of new lows on the New York Stock Exchange were substantially above, 300 or 400% above where they had been in March of 1987, and as you can guess, the McClellan Summation Index was very substantially below where it had been in March of 1987, several hundred points below. So, new high in the Standard & Poor's, failure though by the McClellan and the ADL to confirm it, and a lot more new lows on the New York Stock Exchange. Let's take a look at, roll forward a little to the year 2000. In September, as the Standard & Poor's 500 came back up to its old high, again, the New York Stock Exchange advanced decline line fell substantially short of where it had been months before, way short in that case. And then moving on, the number of new lows on the New York Stock Exchange were substantially where they had been a year before in 1999. And now the Summation Index had failed to make a new high as the Standard & Poor's came up to its high in September of 2000. Those four things occurred, indicating the market was in real trouble. Moving forward a few years to July of 2007, same setup. New high in the Standard & Poor's, failure in the advanced decline line to confirm, new lows very substantially above where they had been several months before. They were 200 or 300% above where they had been a few months before, even though the S&P was making new highs, and again the Summation Index was way below where it had been. Here's what followed those setups we just described. Here's what followed the 1987 setup in August that we just described, a market crash of some 30-35%. Here's what followed the 2000 top we just described, a decline in the Standard & Poor's over the next 2 years of over 50%. Here's what followed that 2007 peak we just described, a drop of some 60% from the peak with those conditions that we just described. Where are we now? You might have guessed by now that we wouldn't even be talking about this if we weren't at a critical point right now. But rather than go on and show those details here in this video, we would invite you to try out Seven Sentinels and come and read today's weekly market report that goes into great detail about where we are now on all four of those measures. And I think you're going to be surprised to find out that we are at a very, very crucial, critical point right now, one that every serious trader should be well aware of. So if you want to come by the Seven Sentinels website, there are a number of articles that you can just punch in and read right now for free by just clicking on the links at the bottom of the homepage, or click on a link called Subscribe Monthly. The one called Limited Time Trial, and for just $9.95 you can have 14 days of Seven Sentinels, including, of course, today's weekly market report and all the details of where we are right now and what that means and what you should be doing about it. For yourself, for now and for the next 14 days. We publish during the day, every night, every weekend, and we give all of our signals and our entry points and our specific trades, and the whole works is there. So if you want to give it a limited time trial for $9.95, we hope you will. But at any rate, we want to thank you for coming by and watching this video today, and we wish you good trading in the week ahead.